Hello friends, welcome back to our channel. This video is about the concept of domination. What is domination and why is it important in trading? This is what we will be discussing in this video. Domination is one of the most fundamental concepts in trading, and this is the concept that I take majority of my trades with. Same kind of confirmation, same setup, same entries, same trades majority of the time. Why should you know what is domination? Say for example, tomorrow you want to buy in the markets. You must at least be sure that you're not buying in a place where the sellers are still dominating, or you want to sell into the markets. You must at least be sure that you're not selling in that area where the buyers are still dominating, right? Just by identifying which domination zone the prices are trading in the market, you can avoid yourself so many wrong trades. You can save yourself from so many wrong trades. Okay, before going into the charts and checking how to identify the domination zone, I want to tell you two things. One, whenever there is domination, there will be momentum. Okay, that means if the prices are going higher, say for example, and if the buyers are still interested to buy in the market, even if it is going higher, this means there is buyers domination in the market, and vice versa for selling. If the prices are going down, further down, and still the sellers are interested to sell the market, it means there is sellers domination. But what happens? The traded volumes are not different in buying domination or in selling domination. The number of buyers and the number of sellers are both the same. What happens is, in buyers domination, the buyers are interested to keep buying even if the sellers are selling it at higher prices. This is what domination means. Let us divide the learning part of domination into three parts. One, identification of the right domination zone. Two, confirmation of the domination zone. And three, entry, exit, and stop loss. Entry targets and stop loss, right? I will be starting from the Bank Nifty chart here of 23rd April 2024. We have the first candle of the day, which is a red candle, and we will start by marking the open of this candle. Why the open? See, how I understood this is, say for example, tomorrow the markets opened gap up, a very big gap up. And what usually happens? The sellers generally come into the market and they heavily sell when there's a big gap up. Why? Because the place where the markets opened was the place where the sellers were very much interested, and the risk to reward was in favor of them. That is why they sold the markets that day. If the same day the markets did not open gap up but they opened gap down, the same sellers wouldn't be coming and selling into the market, because this is not the price now that they are interested. The risk to reward is not in their favor. We would rather have the buyers step into the market and dominate. Now this price is trading cheap, so the buyers would try dominating. What you need to understand is, it is the opening that determines where the market has to go, whether it has to go up or down. What determines is the opening of the candle, the opening of the day, opening of a 5 minutes candle. The same thing we are applying in intraday charts, and that is what we start doing. I am starting by marking the opening of the first candle of the day. The first candle of the day here is a red candle. We will start marking the openings of the red candles to find out the buying zone, the right zone for buying. And we would start marking the opening of a green candle to find out the right selling zone. In this case, let us start marking the red candles. We will not mark the green candles. We'll be doing it in the next example. What is the subsequent red candle? It is this, and the next candle is this, and the next candle is this. We do not have any buyer stepping in. Now at this point, we do not have a lower opening of a red candle. We have the buyer stepping into the market. This is the first hint the market is giving you that the seller domination is slightly fading, or it is stopping now. It will either consolidate or reverse from this position. Now what is it happening in this case? The buyers stepped into the market and there was no more opening of a red candle. The second part of the video that I said is confirmation of domination. How do you confirm? We need to check. See, the buyers stepped in here for the first time. Were they able to successfully take the markets up? No. How will you know that? How will you know that this is not the place where you need to buy? See, what happens is, when the sellers are dominating into the market, the first time buyers came in, the sellers are not going to drop their weapons and say, you guys take over. They are going to come again to fight back at least once. It is that part where we will wait, which is the first time the red candle formed after this buying rally. It is here, right? Now, were the buyers able to successfully close above this candle? No. This says that the sellers are still dominating, and that is what happened in the market. It ended up creating a newer low. Okay, what we will do in this case, we will shift our open to the newer opening candle. One thing you need to note is, in case of red candles, you will never shift your line upwards. Even if a higher red candle is forming, you will not do it, because you are going to confuse your domination zone. Then it will only get shifted lower. And in case of a green candle, it will only get shifted higher. It will not come down even if a green candle is getting formed down, right? Now in this case, we shifted lower, we found a new opening candle. Now we will wait for confirmation. How? We will wait for the sellers to come into the market for the first time after being defeated by the buyers. Did they come? They came here. Now, were the buyers able to successfully close above this red candle? Yes. The sellers were not able to continue this trend, and the buyers came in. And this is the confirmation part of this concept, that this is the right area for you to start your buying, for you to plan your buying. We have still not discussed on where to enter, where to place your stop loss, and where to place your target. I will be doing, but first let's discuss an example of selling. We just saw an example of buying. Now here I have the Bank Nifty chart of 15th April 2024, where the markets have opened gap down, right? Now if you wanted to sell, will you directly go and sell once there's a gap down? That would not be wise, right? Because the market has already opened gap down. We need to wait for the buyers to at least come once, and they must be defeated. How will you find out? It is through this domination concept. In this case, I will not start by marking the opening of the red candle. I will start marking the opening of a green candle, because I am planning to sell. I want to find out the right selling zone. I want to see where the buyers are getting defeated. It will be only possible if I start seeing where the green candles are getting formed. The first green candle is getting formed here. Okay. Now what happened? The sellers closed below this green candle. Okay. This is identification of domination, the first step. What is second step? Confirmation. How do you do that? We will wait for the buyers to come once again to see if they want to fight back. Did they come? In this case, yes, they came here. Were the sellers able to continue lower below this green candle? No. The buyers fought back, and it again came back to the buyers domination zone. In this case, what we will do, we will keep shifting our line upside. We will not shift this lower. Okay. What is the next open above this green candle? It is this. Next is this. Next is this candle over here. This is the last green candle of the day that we find on this day. The sellers started dominating. The confirmation part, the buyers came for the first time to fight back. Were they able to successfully fight back and make a newer high? No. This time, the sellers were able to successfully dominate this zone, and you can see that the sellers closed below this candle. Okay. This takes us to the last part of the video on where to plan your entry, exit, stop loss targets. Okay. Now, whenever you see this happening in the market, you mark this zone, and as you see the sellers defeated, those first time buyers who came to fight back, this is where we will start planning our entries. We will not enter here. Okay. See, whenever this happens, please make a note of this point. We will never directly go and enter, because at least for once, the market will pull back to the place where the buyers came for the first time. Okay. In this case, it pulled back to that place. This is the right zone for you to start your entries. We will at least aim to take 1:2 risk to reward whenever we find this situation in the market in an intraday session. Okay. Your previous swing high would be your stop loss, and we will take a 1:2 risk to reward trade, which we see we have achieved successfully in this trade. See, I hope you're able to understand the crux and importance of finding out the importance of domination, right? How domination works, because no other person in the YouTube has explained the concept of domination so well, or they don't give much importance on finding out the tops and bottoms. This is one of the most efficient way of doing it. We just saw an example of selling and an example of buying. Now what I want you to do is, you need to go ahead and backtest as many charts as you can, because this is what will build confidence. You watch this video as many times as you want, but in parallel also backtest this concept, because that will add a lot of value, and it will give you clarity on how this works on day-to-day basis on different charts, right? Second thing is, There are many intricacies and many other directional concepts to this concept. I have just given you a basic structure. In the coming videos, I'll be going in depth, and that will be adding a lot of edge to your trading. If you have been able to learn something out of this video and this has added value to your trading, please follow our channel, and I'll be seeing you in the next videos. Until then, take care. Bye.